if you look at what's happening in China right now, there is an arbitrage play going on where gold is 40, 50 bucks higher, maybe a little less, but silver is over $4 higher than the Western COMEX and LBMA price, or LBMA price, which is incentivizing arbitrage. But what happens if they said, look, he who has the gold and the commodities makes the rules. Let's just say we'll peg gold at $10,000 an ounce. It's important to understand that currently that gold revaluation account is on the liability side of the balance sheet. The gold that they own is on the asset side. In other words, the rules are for central banks, you're not allowed to offset liabilities with your gold asset. So they put the mirror image in what's called the revaluation account on the liability side of the balance sheet. Hence, they balance each other out, balance sheet. All the OPEC countries on the Belt Road, Saudi Arabia joining the BRICS, Saudi Arabia joining the Shanghai Cooperation Organization. You mentioned, by the way, the president of Belarus. He also called, another thing I've been saying for 3 years, he has called for a summit to introduce the SCO, the Shanghai Cooperation Organization, and I highlight the word cooperation instead of coercion, and the Eurasian Economic Union, who Sergei Glazyev is the economic finance minister for the Eurasian Economic Union, and he is the one who has a big role in what I'm about to talk about. He has called for a meeting of these two unions to join the BRICS. It's going to happen. But all of these things that Saudi Arabia has done as a result of our signing executive order to go green, turning our backs on Saudi Arabia in many respects, and then, what's happened as a result of the weaponization of the treasury market, the dollar market. So in any case, there's this meeting in Novgorod, and it coincided with the G7 meeting. And the Royal Crown Prince of Saudi Arabia turned down an invitation to the G7 meetings. I'm too busy, you guys, but thanks for the invite. And then sends his finance ministers to the BRICS meeting in Novgorod, where 20,000 people attended in over 130 or 40 countries. What came out of this meeting were a couple of very big developments. First development was that 59 countries said we're joining BRICS, on top of the 10 that are already there. Now we'll know in October which ones of those 59 have been admitted and have formally applied, but 59 countries have come out and said we're going to join BRICS, and a whole bunch more are contemplating. But a bigger development came out, and that was two meetings between Sergei Glazyev. Now, Sergei is, this finance minister who's been saying for 3 years, this is why I've been saying that the BRICS currency will be pegged to a basket of commodities and a basket of currencies. He's the architect of all this. The meeting was between Glazyev, Putin, and Dilma Rousseff. Dilma Rousseff, for your listeners who don't know, was the former president of Brazil and is now the president of the BRICS New Development Bank. This is no small job. She is the head of the BRICS New Development Bank, and she came out and confirmed that in the two meetings, they have agreed in principle to a new BRICS settlement currency called the unit. We're going to get into that in a moment. And that it would all be traded over Project Enbridge. Now, I don't know if I've spoken with you about Enbridge, but I have talked a lot about it over the last year and a half or so. It came out in 2023. It's actually been developed for years before that, but developed between China, Hong Kong, Thailand, and the United Arab Emirates. It is a cross-border payment system that allows these countries to trade their central bank digital currencies with one another, not going through any United States intermediary banks or the SWIFT system. I believe that gold and oil have been remonetized, right? I've said that incessantly, including, look at oil. I always talk about gold, but look at oil in terms of its value. China was awarded a massive $2 or $3 billion contract to modernize Iran's biggest airport. And they're being paid for it in oil. Not dollars like it used to be, but in oil. So I find it ironic that the first two trades that they did in testing this system were between China and the UAE using digital yuan to buy oil and to buy gold. And they worked, and now it is working.
OPEC countries are increasingly aligning with the Belt and Road Initiative, a massive infrastructure and economic development project spearheaded by China. Saudi Arabia, a pivotal player in the global energy market, has made headlines by joining BRICS and the Shanghai Cooperation Organization, SCO. This is a seismic shift, indicating a move away from traditional Western alliances towards a more diversified and multipolar world order. This transition is not just a matter of economic alliances. It represents a fundamental reordering of global power structures. President Alexander Lukashenko of Belarus recently called for a summit to introduce the Eurasian Economic Union, EEU, to the SCO framework. The emphasis here is on cooperation rather than coercion, highlighting a desire for mutual benefit and shared growth rather than dominance and control. Sergei Glazyev, the economic finance minister for the EEU, has been a vocal advocate for this shift. He has consistently pushed for a new global financial system less dependent on the US dollar, advocating for a diversified basket of currencies and commodities. Glazyev's influence was clearly evident at a recent high-profile meeting in Novgorod, which coincided with the G7 summit. This meeting marked a turning point, with significant developments that could reshape the future of international finance. The Novgorod meeting was notable not just for its timing, but for the weighty decisions made there. The Crown Prince of Saudi Arabia's decision to skip the G7 summit in favor of attending the BRICS meeting sent a clear message. Saudi Arabia is recalibrating its alliances. This decision underscores a broader trend among global powers to diversify their partnerships and reduce reliance on Western-dominated institutions. At the Novgorod meeting, 59 countries announced their intent to join BRICS, adding to the existing 10 members. This expansion signals a growing dissatisfaction with the Western-led financial system and a desire for a more inclusive and equitable global economic order. The formal applications and admissions of these countries will be clarified in the upcoming October summit, but the scale of interest alone is a significant indicator of global shifts. The most groundbreaking development from the Novgorod meeting was the announcement of a new BRICS settlement currency, provisionally named the unit. This currency aims to provide a stable alternative to the US dollar, likely backed by a basket of commodities and currencies. The creation of this new currency marks a critical step towards a more balanced global financial system, reducing the monopoly of the dollar and offering countries more options for international trade and finance. Project M-Bridge represents a revolutionary development in the world of digital finance, developed collaboratively by China, Hong Kong, Thailand, and the United Arab Emirates. This digital payment system facilitates cross-border transactions using central bank digital currencies, CBDCs. Crucially, it bypasses traditional banking intermediaries in the SWIFT system, representing a significant shift away from Western financial dominance. The project is not just a theoretical concept, it has already been successfully tested in pilot transactions. These included using digital yuan for trading oil and gold, demonstrating the system's potential to handle significant commodities in international trade. The ability to settle these trades directly without converting into US dollars is a game changer, indicating a move towards the remonetization of commodities like gold and oil. This shift could challenge the dominance of the US dollar in global markets, especially in critical sectors like energy and precious metals. Project M-Bridge's success reflects the broader trend of financial decentralization. As countries increasingly seek alternatives to the US-dominated financial system, the adoption of CBDCs and digital payment platforms like M-Bridge will likely accelerate. This could lead to a more multipolar financial landscape, where multiple currencies and digital assets play significant roles in global trade. I've often emphasized the remonetization of gold and oil, and recent developments underscore this trend. For example, China was recently awarded a contract to modernize Iran's largest airport, with payments being made in oil instead of dollars. This marks a significant shift from the traditional dollar-centric trade system. Settling international deals in oil or gold rather than US dollars indicates a broader trend towards reducing reliance on the dollar, especially in strategic sectors like energy.
If you look at what's happening in China right now, there is an arbitrage play going on where gold is 40, 50 bucks higher, maybe a little less, but silver is over $4 higher than the Western COMEX and LBMA price, or LBMA price, which is incentivizing arbitrage. But what happens if they said, look, he who has the gold and the commodities makes the rules. Let's just say we'll peg gold at $10,000 an ounce. It's important to understand that currently that gold revaluation account is on the liability side of the balance sheet. The gold that they own is on the asset side. In other words, the rules are for central banks, you're not allowed to offset liabilities with your gold asset. So they put the mirror image in what's called the revaluation account on the liability side of the balance sheet. Hence, they balance each other out, balance sheet. It would be very easy, and this is what the Dutch central banker is saying, to make their balance sheet go from putrid to pristine like that if they just revalue gold. What is gold worth? It's worth whatever the highest bidder will pay for it. And if China and India and Russia and all of these countries say gold's 10,000 an ounce, who does that benefit the most? Oh yeah, that's the countries that have been buying the hell out of it. And when you talk about China, if you believe they only have 2,600 metric tons, I have some oceanfront real estate to sell you in Arkansas, because they've been producing 400 to 500 tons a year for the last 25 years. They're the largest producers and importers in the world. For years, they never told anyone how much gold they have. Heck, we don't even tell everyone how much gold we have. Well, we do. It's supposedly 8,300 metric tons, which hasn't been audited in over 60 years. And when Ron Paul says, let's audit, no, turn down. So the point of it is all of these countries who are wickedly buying gold are not being honest about how much they are buying. You have commercial banks in China that work on behalf of the PBOC that buy gold from the refineries in South Africa and in Switzerland. They don't tell the IMF how much gold that they just bought on proxy for the PBOC. You got gold that they buy that's under 995 pure. That doesn't get reported to the IMF. Heck, the IMF came out recently, just a month or two ago, and said that the amount of gold China says they have is fugazi. It's way, way understated. And so my point to you is, why would they want to tell us how much gold they have if indeed they will revalue it? Here's how much gold we really have. And in other words, it would crowd them out of their continual accumulation of gold using the suppression of the Western central bank prices, where on the LBMA, they admit to trading 20 million ounces of gold and 290 million ounces of silver per day. However, they also admit that the numbers that they publish are 10 times understated, because they only show the settlement. If I sell you 100 contracts and I buy 200, the net is 100 for me, but they don't show that I traded 300. So if that really is the case, they're trading 200 million ounces of gold per day and 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, distorting the hell out of the price in gold and silver. And my point to you is simply this. This is just beginning. And these countries have understood the Achilles heel to the system is standing for delivery. No one ever did before. And the countries in the global south and east were never sophisticated, coordinated, or wealthy enough to do it. Now they are. And they're draining the exchanges, both the LBMA, the COMEX, the ETFs, and even the Shanghai Metals Exchange. They're all being drained. And I would tell you, this is just the very beginning, I think, of where gold ultimately goes. So for those who think they're too late or want to, in this case, take profits, do so at your own peril. I think it would be a very big mistake.
The recent price arbitrage in China, where gold trades at a premium compared to Western markets, highlights a growing divergence in global commodity pricing. This premium can sometimes reach $40, $50 for gold and over $4 for silver. Such discrepancies suggest a robust demand for physical gold and silver in Eastern markets, contrasting with the paper-dominated markets in the West. This demand differential could be an early indicator of a broader shift towards valuing commodities based on their intrinsic worth, rather than speculative trading. Consider a scenario where major economies like China, Russia, and India decide to peg gold at $10,000 an ounce. This would not just be a market event, it would be a geopolitical move with far-reaching consequences. These countries have been quietly accumulating gold for years, and their official reserves likely understate their actual holdings. Such a revaluation could destabilize fiat currencies, particularly the US dollar, and recalibrate the global financial order. Transparency in gold holdings remains a contentious issue. The United States claims to hold 8,300 metric tons of gold, a figure that has not been audited in over 60 years. Similarly, China's reported gold reserves are widely believed to be underrepresented. The lack of transparency serves strategic purposes, allowing these nations to accumulate gold discreetly without driving up prices. The People's Bank of China, PBOC, uses commercial banks to purchase gold from refineries worldwide, often without reporting these acquisitions to international bodies, like the International Monetary Fund, IMF. This underreporting extends to gold that is less than 99.5% pure, which does not have to be disclosed. The IMF itself has questioned the accuracy of China's reported gold holdings, suggesting that the actual reserves are significantly higher. This strategic underreporting allows countries to continue accumulating gold at relatively low prices, leveraging the suppressed market conditions created by Western financial institutions. Once these countries have amassed sufficient reserves, they could disclose their actual holdings, potentially leading to a revaluation of gold. Such a move would fundamentally alter the balance of economic power, benefiting countries with substantial gold reserves. The quiet accumulation of gold by nations like China and Russia is a strategic move with long-term implications. Unlike fiat currencies, which can be printed at will and are subject to inflation, gold retains its intrinsic value. This makes it an ideal asset for reserve holdings, especially in a world where the stability of fiat currencies is increasingly questioned. These countries understand the vulnerabilities inherent in a fiat-based financial system, particularly one dominated by Western central banks. By accumulating gold, they hedge against potential economic crises that could result from excessive money printing and debt accumulation. The high trading volumes in gold and silver on platforms like the London Bullion Market Association, LBMA, and COMEX suggest ongoing price manipulation to keep these assets undervalued. This benefits countries looking to build their gold reserves without inflating market prices. For those considering investing in gold and silver, the current global landscape offers a unique opportunity. The strategic moves by central banks, the development of digital payment systems like Project Bridge, and the ongoing accumulation of gold and silver all point towards a significant shift in the global financial system. As fiat currencies face devaluation and the global economic order becomes more multipolar, gold and silver are set to play increasingly crucial roles. These precious metals are not just safe haven assets. They are foundational elements in the emerging financial architecture. As more countries accumulate gold and silver, the intrinsic value of these metals will likely rise, providing a hedge against the declining value of fiat currencies. To our viewers, now is a critical time to evaluate your investment strategies. The clear signals from global central banks and the development of alternative financial systems indicate a diminishing role for fiat currencies. The strategic accumulation of gold and silver by major economies suggests these metals will play a pivotal role in the future financial landscape. Diversifying your portfolio to include physical gold and silver is not just prudent, it's a necessity. Whether through direct purchases of bullion, investment in gold ETFs, or even exploring digital gold platforms, there are multiple avenues to secure your financial future. Staying informed and understanding the broader economic and geopolitical trends will empower you to make informed decisions.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.